Welcome back, guys. Welcome to a new video. Today we're going to be talking about how NIO just completed its 80 million share capital raise at about $39 a share. But before we get into all that, if you guys could please smash that like button and hit the subscribe button and the notification bell so you can get notified of all of my new videos. This really helps get myself noticed on the algorithm and grow my channel so I can get all this information out to you guys and help as many people as I can. So let's take a brief recap at what NIO's been doing over the past 3 months. So in September, it was around $22 a share and then went on an absolute moon mission up until November, where it topped out at around $57 a share. Now, it did have a couple hiccups along the way where Citron launched a short attack on NIO, which was right around here on the 13th. This did have a short-term effect on the share price, but then it rallied all the way back up and then came back down where it found support at around the mid-40 range. Now, let's get into what the bulk of this video is going to be about today. So NIO offered 68 million American depository shares, each representing one Class A ordinary share of the company at a price of $39. And in addition to this, the company granted the underwriters of this deal an option with a 30-day expiration to purchase an additional $10.2 million or 10.2 million shares at $39 a share. Now, this option was exercised on December 16th by Morgan Stanley and China International Capital Corporation Hong Kong Securities Limited. So now they have exercised their right to buy these shares and they are now owners of them. Now, all of this information can be found in the Form 3 and the attached prospectus supplement. But basically what it says is that NIO is going to be using this offering for mainly research and development of new products and next generations of autonomous driving technologies. Now, this is basically all what these companies are about. They want to get to fully autonomous driving so that we can have what Tesla's trying to get towards, which is like the robo-taxi, where you can actually use your car as an income source. You can kind of lend it out as its own Uber. And then they also have a bunch of new products that they want to release. Now, one of their new products is the 100 kilowatt hour battery. Now, this is very important because when these types of electric vehicles started to come out, people had some sort of anxiety that they wouldn't have enough battery to get where they needed to go and that they would be stranded with no way to charge up their car. Like with a traditional car that uses gasoline, you could just get to a gas station, get some gas, come back, fill your car up, and you're good to go. But with these electric vehicles, there's not always a charging station within a couple miles of you, so you really needed to plan out your trip accordingly. Now, NIO launched the 100 kilowatt hour battery with flexible battery upgrade plans. Now, the flexible battery upgrade plans means two things. NIO has teased that they want to come out with a 150 kilowatt hour battery, which is about a 900 kilometer range. That is huge. They also want to come out with a battery swap system, which they've already started to roll out, which I will discuss in a few moments. So basically, the battery swap program entails if you own a NIO car and you have a battery with less range than the ones that are currently available, you can go to one of their stations and have your battery swapped out for the new battery. This is great because this creates a sales system so that NIO customers will buy the car, and then when they feel that their car has become outdated, they don't have to buy a new car since the NIO cars are rather expensive, but they can go and have their battery swapped out, which is a very good business plan for NIO where it keeps their customers coming. So NIO has reached a deal to build 100 of these EV charging battery swap stations in China, which is amazing. They've signed a cooperative framework agreement with the State Grid Electric Vehicle Service Company to jointly construct 100 battery charging and swapping stations in 2021. So this is very important because after sales inflected higher following a COVID-19 driven downturn, NIO is executing on its strategy of improving user experience and service. This is very important since even though COVID-19 put a lot of financial hardship on a lot of these people, or everybody, as a matter of fact, they still are trying to improve and find ways to bring value to their customers. Now let's take a look about what Bank of America has to say. This was one of the more recent analyst decisions and consensuses brought on NIO, but the analysts at Bank of America maintained a buy rating on NIO with a 54.70 price target. So this Bank of America's positive view on NIO is predicated on its long-term share gain potential in the premium EV market, improving profitability along with rising scale. I will talk about that in a minute, but the long-term share gain potential is extremely important, especially since NIO is mainly operating only in China right now, with a few cars being shipped to other places. So now NIO is also planning to introduce its first sedan model and reveal more details on NP2 at its NIO Day scheduled for January 2021. So the NIO Day is going to act as a major event for this company. I'm predicting that there's going to be a massive implied volatility run-up for the information that they're going to disclose, because we don't know if they're going to release the 100 kilowatt hour battery, how well these cars are going to look, perform, how well their autonomous software has been going. But the company is modeling vehicle gross margin of about 15 to 20% over the long term, which is very high. So going back to its long-term share gain potential, NIO is going to enter the European market in 2021. Europe is one of the areas in the world that has a very high demand for electric vehicles. So now, according to unconfirmed media reports, so again, these are unconfirmed, which also creates a massive ceiling. It lifts the ceiling on how high NIO can go if this gets confirmed, and they can go and expand their business and gain more market share. So the target of the Marco Polo project, which is the project for expansion of NIO, is to sell some 7,000 electric vehicles within 2 years. That's some big numbers for a company that is just moving over to a new market. So the first overseas NIO house store might be opened in Copenhagen, Denmark. Now, what does this have to do with the share offering? So in order to do all of these things, to expand, to create all this value for their customers, they need to raise more money. So they could have done this privately, but since they're a publicly traded company, they thought it would be best to issue more shares to investors, which is very smart. Although it created a short-term bearish trend on NIO, it consolidated within the mid 40 range, which is still very good year on the year. Now, going back over here, if we can see NIO start to get a greater market share in the European market, we could see NIO go on another run, just like the one we've seen here, which would be great for investors. So now I think the next event that would really create a big jump for NIO and all of the other electric vehicle companies as well is Battery Day on January 9th. So NIO is gonna have their implied volatility jacked up even more than it already is. So if you can't afford the options on NIO, or if you just want to go with shares, that would be smart. But you can play the other companies like LI and XPeng, which would be also great options because they will be sympathies to this. That is pretty much it for today's video. Please leave a like and subscribe, and I'll see you next time.